Hello and welcome everyone. My name is Minouche Shafik and I'm the director of London School of Economics and Political Science. And I'm delighted to welcome you all to this event where we're hosting Ray Dalio at the LSE. Now, Ray Dalio has led an extraordinary life. He grew up in a middle-class home in Long Island. His father was a musician, his mother was a homemaker, and he fell in love with markets at the age of 12 after buying his first stock with the caddy money that he had. And he promptly tripled it, identifying an early comparative advantage. He founded Bridgewater in 1975, and it grew into becoming the world's largest and most successful hedge fund. It succeeded even in difficult times, including the 2008 financial crisis, where they emerged successful because they learned the lessons of the Great Depression. And after 47 years of running the firm, he has now transitioned the management to a new generation of investment leaders, and he continues to be involved as an advisor and mentor to the firm. He now devotes his life to philanthropy and is deeply interested in protecting the oceans and addressing issues of education and opportunity gaps. And he's also become an educator, writing books and articles and economic studies to try and share his ideas with the wider world, to encourage other investors to be successful and to help all of us understand the world economy. Today, we're going to talk about his recent book, Principles for Dealing with a Changing World Order. And I'm going to let him lay out the arguments in that book and then have a few questions from me and then turn to the audience to ask your questions. I'll also flag that we've put a couple of videos that he has done in the chat, which you can follow after the talk if you're interested in learning more about his ideas. Ray Dalio, welcome to the LSE.
Oh, thank you for having me. It's very exciting.
So I wanted to start by giving you a chance to kind of lay out the big arguments in your book, why you chose to write this book, and as a macroeconomic investor, how the study of history has informed your approach, and what are the big themes that drive the arguments in your book. I'll let you introduce it now. Okay.
Well, in investing over the last 50 years, I've experienced the phenomenon, I guess, of being surprised about things that never happened to me in my lifetime before, but happened many times in history before. You referred to my studying the Great Depression as being the reason for us doing very well during the 2008 financial crisis. So there are such experiences, and there are three experiences that are happening now and were happening that never happened in my lifetime before to these degrees, that led me to need to go back and study the last 500 years of history, and most importantly, the cycles of rises and declines of empires, reserve currencies, and so on. So the three are, first, the financial and economic that comes from creating the most amount of debt and the greatest monetization of debt since the 1930s. That phenomenon and how it works itself through the system to affect currencies, to affect inflation, and so on. I needed to go back into history before the 30s and see that cycle and what it was like before that, the value of money. The second is internal conflict. We have the largest wealth gaps, the largest values gaps, the largest political gaps, it is all measurable, since 1900, even including the 1930s, which of course they were enormous, because if you look around the world, you had populism of the right and populism of the left, which became, fascism and communism and so on. And that toppled four major democracies, chose to be autocracies as a result of this populism. And so right now, we have a similar situation in which there are unreconcilable differences between populists of the left and populists of the right, which call into question what democracy, how democracy will work, and the risks to those systems. And the third, of course, is the rise of a great power to challenging the existing great power in the existing world order. 1945, after the war, very classically, you have a war, you determine a dominant power. And then with that dominant power, there goes that world order, that new world order. In 1945, the United States accounted for 50% of world GDP. It had 80% of the world's money, which was gold. At the time, it had 80% of the world's gold. It had a monopoly on military power, and we began the American world order, which was reflected in the United Nations being in New York, the IMF and the World Bank being in Washington, D.C., and so on. But as there is always the case, there is an evolution of that. And so there are rising powers that take place to eventually challenge the leading power. And that creates the types of conflict, international conflict. So those three factors, the financial debt money creation one, the internal conflict, wealth gaps, values gaps one, and the rising world conflict one, drew my attention and said, I need to study more, no more than the 30s. And so that drew me back to study the last 500 years of history. And that's what's covered in the book and the lessons from that. So that was the motivation. But to make decisions now, I'm not a historian. I'm a practical guy who has to bet on the markets every day. So it's not, although very interesting, of course, but from a practical point of view, what is happening now is primarily driven by those three things, although I'll add two more in a minute because I've already talked too long, so I'll pause. I'll add two more whenever you want them.
Why don't you go ahead and add the two more now?
Okay. Well, in studying history, I learned that acts of nature, particularly droughts, floods, and pandemics, had a bigger effect, an even bigger effect than these others, a comparable effect in terms of bringing down empires, in terms of deaths and so on. So I didn't really have the full appreciation for those acts of nature. And I think it's very relevant to climate change, pandemics, and so on. It was, wow, it brought that to my attention. And the fifth factor, which is the most important factor, is an evolutionary factor, which is man's inventiveness. Man's inventiveness, unlike the first three, which are very cyclical, man's inventiveness is evolutionary over a period of time. It raises living standards. It raises life expectancy, living standards. So if you were to see, let's say, what happens, and it's on the cover of my book, is a diagram that there's evolution, which, sort of moves along like that. And then around them, those first three move in big cycles. The first three work together to reinforce themselves, either in improvement or deterioration, work together in order to produce what I call the big cycle. And that big cycle is of rises and declines, which goes from periods of world order changes, domestic order changes, wars and revolutions, to periods of prosperity that have improvements, to periods of excess in debt, money creation, excess in wealth gaps, excess in alienation, and conflicts internationally to produce the next cycle. So that's what it looks like to me.
So I want to probe a little bit, because in the book you develop a set of metrics that you use to measure an empire's power. And education is the first. And I'm guessing it's partly linked to what you just said around inventiveness and how human inventiveness helps promote power and economic progress. Could you say a little bit more about the role of education and how you chose the metrics and rankings that you used for your analysis?
Well, yes, to be clear, I didn't start with any preconceptions. I mean, I do have views, which I think are just sort of common sense views. If you have a better education and you have higher levels of civility and you improve your competitiveness, you'll earn more, you'll become wealthier, more powerful, that kind of thing. But I did the measurements. So in the book, there are 18 different measurements, and they're just sort of the common sense measurements, measures of productivity, share of world GDP, a number of those. And then I lined them up because I'm into measurements. Measurements keep objectivity. Measurements are the basis of even seeing the cause-effect relationships. I'm always looking 10 years in the future. I sometimes look shorter term than that, but I'm looking into the future by understanding the cause-effect relationship. So back to education. Yes, what you see, of course, is that education is the leading indicator. So if you were to look around the world, as you see changes in relative education, you see that follows. Very much connected to that, though, is the cost of an educated person. Very good indicator. So it's not just the level of education, but when that education becomes very costly, then you will see the movement go to someplace. Like, for example, India offers great value in the cost of an educated person. It's a good indicator. It's one of the good indicators. Levels of indebtedness is a very good indicator for subsequent periods of growth. Then there are social measures and other measures. For example, corruption indexes. These are all now statistics. We can measure them going back a long time. When you have a higher level of corruption, it has a negative 52% correlation with the growth rate in the next 10 years. So these are all measurable. Of course, education, but education, I don't just mean like knowing more, math, science, and so on. I also mean learning civility, learning how to behave well with each other. You can be very smart, but you don't understand how to work well in a society that works well. So though education, of course, is very important.
And I wanted to ask you about China and where China is in the big cycles that you identify, and particularly given the fact that China has now reached a point where its population is expected to shrink for the first time in 60 years, and how important is that demographic change to where China is in the cycles that you've identified? Okay,
I'll first deal with the broader China question, then I'll come to demographics. On the broader China question, you'll see in the book, I also went back to the Qing dynasty, which was 221, and I followed all the cycles. And you'll see that through history, China was more often than any other country, number 1 or 2, and then it goes through the cycle. And so it had a cycle which started really in the early 1800s, particularly around 1840, when it was almost on top of the world, but it was weak militarily because it was isolated and so on. And events, the British and other powers come in, and they begin the 100 years of humiliation. And you see in that chart, you see a plunge in the power of that until World War II, the Civil War then that they had, and in 1949. And then in each one of those measures, with big bumps along the way, you see a rise. And particularly in 1970, Mao dies in 76. Deng Xiaoping comes in 78. And you then see two big policies, an open door policy and a reform policy that brought in more market economies. And you see from that point all the way through an explosive rise in the per capita, all the measures, education, life expectancy. To put it in perspective, when I started to go to China in 1984, per capita income since then has increased by 24 times. So if you use all the measures, you'll see them in the book: education, competitiveness, share of world GDP. Their share of world GDP is comparable to the United States' share of world GDP. Share of world trade, theirs is considerably larger. At least China's a larger trading company. Technology development, all of those measures show that movement all the way up until now. And so now China is faced with some difficult issues. And if we choose to, we can get into those issues. But the force and the power and its approach, which is largely a semi-Confucian type of approach, has proven through history to be very powerful. As regards to your question of demographics, is one of those. It's a particularly difficult issue in China, not just because of the demographics. I believe that demographics are not necessarily the biggest, a big problem if productivity increases faster. Output, total output is number of workers times output per work hour. And so if you have productivity, you can raise living standards by having productivity that's greater than that. And so it doesn't necessarily mean the number of people or the productivity. Of course, it means that a smaller number of people have to support a population that's older and so on. This is particularly challenging in China. And that is because the importance of the family and the single parent household. In other words, the social network, the family network is very important in China. And their lack of a pension system, an adequate pension system, is very problematic in China. So you have, let's say, a married couple, which is trying to take care of 4 alive parents without a social system to be able to do that, even a healthcare system and so on. That is a very burdensome, problematic area. And of Chinese population, that population over 65 is like about 350 million people. Okay, so you're dealing with something that is an issue in China. There are other issues in China. There's a nature issue. Always droughts and floods and water is a big issue. But there are other issues, but I'm just answering your question on demographics. Certainly demographics is a big issue in China.
Yeah, but it sounds like from what you're saying, you don't think China has peaked from a growth and empire perspective, that its trajectory continues to be positive.
Yes, it is. There are important problems now in China, which I'll touch on. And then underneath that, there is great progress in the development of technologies, education, healthcare, and winners of technology wars are winners of wars. So there is a great power that exists. The problems that they're facing right now have to do with there is a debt economic problem, which has to do with the real estate problem and a debt problem, because real estate is such an important part of their economy. Counts for about 25% of the economy, and it counts for about 70% of savings, because a lot of people save in real estate. And so the wealth effect that that's having as it passes through is passing through their economy to have an effect on that. As I mentioned, acts of nature have historically been very important, and particularly in China. They've experienced many pandemics. This pandemic, I'm sure in their minds, this is another one of those pandemics. Mm. And the pandemic of COVID has certainly played an important role in a number of ways, economically and beyond that. And then other acts of nature, such as drought and water, are considerations that are happening. And then, of course, there is a leadership issue and the evolution of the questions of how exactly does the free enterprise system work, and how exactly do wealth gaps. In other words, the issue of common prosperity and how does common prosperity work? I think many countries, the United States included, could do well with more common prosperity. Mm-hmm. And so, but how that works has been a question mark. I think more doubt than actual reality. And then the issue of small being better than big. In other words, breaking up technology companies or changing the power of technology companies and encouraging smaller technology companies and a very strong top-down approach to the management of that. And that has political issues and other issues. These are issues that exist now, as is the world environment. Mm-hmm. So the Chinese recognize the risks, just like most other people recognize the risks of war, different types of war. There are 5 kinds of war. There's a trade war, technology war, geopolitical influence war, a capital war related to an economic war, and then there's a military war. All of those risks are increasing. And so that those factors together are playing a role to dampen the Chinese economy now. I view most of those, I believe, anyway, we'll see, as more transitory, and that the power of what they're doing underneath that surface is still very strong.
So you've brought me into a very nice segue to another empire and another war, which is what's happening in Russia and Ukraine. How do you think about what's happening in Russia and Ukraine in the context of your framework of the rise and fall of empires and what's happening with the world order? How do you think about it?
Well, of course, economic power and military power are one power. They're essential. The collapse of the Soviet Union was due to the fact that they couldn't spend the money, that economically it collapsed. Then the Soviet Union was, and Russia today is, not a significant economic power, although it is a nuclear power and it is a military power. The military extends beyond nuclear. It includes cyber, it includes other types of powers. So alone, it was faced with the classic dilemma of what it perceived as an existential threat due to 2 things, really. The movement of NATO countries east after the Cold War. And the other issue is the relatives in the Ukraine, because almost everybody who lives in Moscow has relatives who live in the Ukraine. And those issues and so on became, from their perspective, an economic issue, an existential issue. And of course, then there is that conflict. So history has shown Russia has always had this conflict and the borders. So we go back to Napoleon, we go back to the wars, we see it, and we see kind of a repeat of that particular element of dynamics. But of course, alone, it is not an adequate power, but it has weapons that are dangerous. So the way I see it is, in the beginning of this war, wow, only 7 months ago, there were three questions. The first question is what the impact of the West sanctions would be in the war. And in the early stages of this, almost up to here, not as much power. In other words, economically, the currency and so on has a corrosive effect. People are leaving and so on. But there was only a modest decline in production and so on. Certain conditions matter, but not as much. There was the question of if Putin loses, will he win, will he lose? Win represents controlling the eastern part of the Ukraine, not having the bad devastation sanctions, and remaining on the world stage, such as going to the G20 meeting and so on. And so we saw that by and large, in those respects, he was winning, but he was losing shockingly, militarily, in ways that surprised everybody, I think. And then we had the question as how other countries would align. And it's very clear how other countries align. So by and large, NATO countries are aligning against the Soviet Union, against Russia. But if you look at around the world, China, India, Indonesia, Brazil, we could list them, are not aligning that way. Now we have the existential issue. The military winning and the sense of morale, the loss of morale, the loss of equipment, and so on. And that raises then the existential risks. So the way that and then the question was China going to be drawn into this one way or another, particularly through American sanctions, or how would it behave in this? Because that could have expanded. The relationship between China and Russia, as you know, is very close. It has a lot aligned. So we're seeing that transpire. I would say that, so now we are in a classic case of the existential risk to Putin and Russia, and whether you get escalations and the capacity of escalations. I don't believe they will work, but they're dangerous. Yeah. And then also there's the danger of the risk that Russia falls and Putin leaves at the same time. That most people in NATO would think about that as being an advantageous thing. I was speaking with Henry Kissinger. I learn a lot from other people. I'm lucky in that way. And as Henry Kissinger was pointing out, that would be very much analogous, perhaps, to Saddam Hussein in Iraq falling and create a great void. So we're right now at that point, that very risky point, which will be resolved soon. And then, of course, we have the conflict with China, which is also at a very risky point. These are no longer countries like Afghanistan or Iraq. These are now big world powers, and we are dealing with existential issues, and they are fighting in various ways right at the edge. So in much the same way as World War I, the early stages prior to World War I or prior to World War II, it's a very much analogous of that. And the fact that it is happening when the other two factors are happening, the financial one, and producing the stagflation, and the internal conflict one, again, these ring in my ears for what has happened before.
So I'm going to ask you, we've got lots of questions coming in from the audience, but I'm going to ask you two investor questions. The first I have to ask you, because we just had a massive fall in sterling over the last 24 hours, which has now fallen further than at any time in history since the creation of the US dollar, almost at parity with the dollar. And it would be great to just get your take on what's happened with sterling and the UK.
Yeah, as always, I really like to try to convey cause-effect relationships mechanics, because everything that happens because of causes and cause-effect relationships. What's happening now in sterling, and by the way, could happen in a number of countries, is very similar to what happened to sterling in the ERM breakup in 1992, which is when the debt assets that you're holding, bonds or somebody's assets, and when there is a supply-demand imbalance, so that, let's say, a government has to sell bonds, has to sell a certain amount, and there's not buyers on the other side for that amount, that there has to be, that imbalance has to be resolved. Now, in the 92 ERM realignment, there was a fixed exchange rate. And as a result, the dynamic is interest rates rise to the level where it's intolerable. And when it's intolerable, it can't rise. And so there needs to be the depreciation to make the currency so cheap that the balance of payments improves. In other words, the balance, money can go into sterling to buy goods, services, or financial assets. And so the asset, whatever they're buying, has got to become so cheap. And that can happen through the currency or through the price adjustment by the depreciation. So that's the dynamic. And it's a world dynamic. As you look to Europe, I think in particular, and particularly, let's say, Italy, for example, it's analogous that there is and by the way, it's true in the United States. There is so much more spending than there is income. And that means that bonds have to be sold, that debt. So think about it in the United States. 5% of GDP, the government will run a deficit about 5% of GDP. That means they'll need to sell bonds of about 5% or debt of about 5% of GDP. And the Federal Reserve said that they're going to sell or have run off 5% of GDP's worth of the balance sheet. That means 10% of GDP, a huge amount of GDP, a large number has to be sold. There are not corresponding buyers for that amount. That means that mechanistically, either rates rise, the cost of money rises, and the way that that balance is achieved is private credit contracts. Okay, so in order to bring that imbalance, that balance. And so when private credit contracts, economies contract. And so what's going on in sterling is a panic, not a logical movement out of this asset, in which there's not a control on the supply of the debt that's being put out there, and that imbalance, which is also representative by and large. Look at the euro and euro-denominated assets. Look at the interest rate you get. Look at the inflation rate you have. And so that's a risk, and it's a risk for most of the major currencies.
So let me just ask a final question. Macro hedge funds, usually one thinks of them as people who are always thinking about the short-term future. You're very unusual because you run a macro hedge fund, which based on you're thinking about the long-term history. How do you translate these views, these historical lessons into investment strategies?
Whatever works. You know, I do whatever works. And I would say, I would not have understood what's now happening in the cases that you're bringing up unless I saw it repeatedly through history. So I'm like a doctor who wants to see many cases, and I can't just limit them to the ones that are in my lifetime.
Front of you. Yeah.
So I have to see. It's like, let's say you're a doctor and you're dealing with cancer, and you watch as it stages. There's a typical case, and then there are many other cases. And what I need to do is I study them. I need to measure them, and I need to quantify and test my decision making in order to understand that. If I didn't understand what we're talking about and the last 500 years of history, I can't be in the position I'm in. We this year are very significantly profitable. I mean, our flagship Pure Alpha Fund is up about 30%. That's happening today. That's happening now. In terms of that. So that understanding can only be achieved by for me, the exercises that I'm going through and the lessons that I'm trying to pass along in the book.
It's interesting. Of course, always the best doctors are the ones who've seen the most cases or have done the most operations. And so they're constantly looking at the data. Must be a big part of it. So let me turn to some questions from the audience. The first one is from Maximilian Rudolph, who's an MSc student at LSE in risk and finance. And he says, you often say that knowing how to deal well with what you don't know is much more important than anything you know. And also that you always start by, quote, eliminating left tail risk. So how do you deal with your not knowing and that left tail risk?
Yeah. I had an experience. I don't know how much time you have, whether you have time for a story or not, but
sure. Tell us a story.
In 1980 and 81, I had calculated that American banks had lent more money to emerging countries than those countries would be able to pay back, and that there would be a debt crisis. And with that debt crisis, I expected an economic crisis. And I got attention for that controversial point of view. And in August 1982, Mexico defaulted and a number of countries defaulted. And I thought we were going to have a big economic crisis. And I could not have been more wrong. The Mexico defaulted, almost the day Mexico defaulted was the exact bottom in the stock market for a big bull market that followed. And I was just it was early days for me starting Bridgewater. And it was very painful. I lost money for me. I lost money for clients. I was so broke I had to borrow $4,000 from my dad to help to pay for my family bills.
Wow.
And very painful.
Hard lesson.
And it was one of the best things that ever happened to me. Okay. It was one of the best things that happened to me because it gave me the humility that I needed to balance with my audacity and caused changes in my behavior. And those changes in my behavior were first, to know I never know, and to try to find the smartest people I can who will disagree with me and stress test my thinking. So it taught me radical open-mindedness. And it taught me how I could substantially reduce my risks without reducing my returns. Like I felt like I was literally, I felt like I was at the edge of a jungle. And I was a point in my life, and I could say, risk and return go together. And I don't want to do these risks like this anymore. But then I won't have the returns. And I can't have an extraordinary life. So I felt like my choice was like, if I could get to the others, I've had to go through this jungle, faced with this choice. Do you go through the jungle, which you can be killed, or do you, but if you get to the other side, you have the greatest life, or do you not go into that jungle? That's how I literally felt. And I realized the way to do it. And I learned about diversification, how I could literally cut my risks by a factor of 80% without reducing my return. I learned financial engineering to be able to do that well. Okay. So, wow, same returns with 80%. I learned also that when going into that jungle with, in which there are all the things, to go in it with people who can see things differently than I could see. and who were on the same mission, and that would watch out for each other and so on. And that experience became so good that I didn't want to get to the other side of the jungle. I still enjoy being in the jungle and playing the game. So that painful experience taught me, okay, how do you deal with what you don't know? First, you don't want to have concentration, such concentration, and you can diversify equally good uncorrelated bets to be able to substantially reduce your risk. And that open-mindedness to see what you can't see, so you're prepared for that. And that point was really that was the turning point. From that point forward, everything fell into place and continues to in those ways fall into place. Those are the lessons I'm trying to pass along.
Okay, very good. Let me turn to the next question from Ramina Basi, who's an LSE alum, did economics and management in 2022, so a recent graduate. To what extent does your thesis rely on the premise that people will continue to seek centralized bureaucracy and collective collaboration to administer their lives? Are modern technologies like cryptocurrencies and blockchain questioning that thesis? Is global influence still measured accurately with our traditional means, or has the nature of influence also changed and required new metrics?
Yeah, that's not my theory about, so just to take that off the table, that would not be a good characterization of anything that I'm saying.
Yeah. So you don't require centralization for your theory?
No. Decentralization. Through history, things have fallen apart. We had decentralization, then you have centralization, and the way that it operates. The thing that's happened over time is we've all become closer. It used to be that it would take in a day you could travel 25 miles. Today you go the other side of the world. We're all connected and so on, and technologies matter. But I have no such theory about that. What I do is I look at the cause-effect relationships, and then I plot how is actually happening relative to the template. So I have a template, like a doctor seeing many cases. There's a stage 4 cancer or something. That doesn't mean a certain outlook, and there's better and worse ways of handling it, and so on. So I plot and I understand just very much like a doctor would.
Okay. Next one is from Henning Jacobsen, an LSE alumna from 2019, who says, "Hi Ray, fascinating hearing your thoughts on the world order. How do you assess the policy shifts we've seen in the UK mini budget?" Building on the question I asked you earlier, the market's reaction to it, the falling pound, higher treasury yields, FTSE plunging. And do you adhere to the claim that the UK is behaving like an emerging market economy? I'd be particularly interested to hear how you assess the UK's world position through the framework of metrics and principles. Thanks.
Okay, a number of questions. I think I asked the first two. Yeah. If you don't have a reserve currency, particularly, but even if you do to some extent, there's a supply demand that will be manifest in either a balance of payments, and it'll either depreciate. And so if you produce too much borrowing and you can't lend, just the mechanics of that mean what is happening now. And that's happened repeatedly through time. And in that regard, it is like an emerging country. Mechanistically, it's like an emerging country. Because of, what in a country that doesn't have a reserve currency, and it is in its currency, and it still has to operate in the world in a reserve currency, there's the mechanical dynamic of that. And so what causes inflationary depressions or inflationary contractions is that dynamic. So yes, it is analogous. Mechanistically, it's sort of analogous to that. In terms of where the UK is in its existence is, it's measured by the size of its economy and its military power, most importantly, and it is not a leading power. It has many strengths, but it is in a lifetime, in the Queen's lifetime, in my lifetime, it's an example of how things change. So yes, it is not a major power. It is, and its identity and that world is in the world is is questionable. Is it part of what? Who are its allies? What does it have to offer? It's that's what it is.
Okay. Different question from Matthias Puzevetsky on education. Usually when a society becomes more productive and therefore wealthier, people tend to focus on other aspects rather than on education. Is there a way to develop a framework to prevent the decline of education in golden ages? I think he's sort of the age of decadence, or is it part of the natural human process? It's hard to imagine a society that grows ad infinitum.
Right. I'm totally in agreement with him and we see it in the charts and in the book. It is that dynamic, and we could take how the Dutch Empire was passed to the British Empire and the British Empire and so on and so forth. Yes, that's the dynamic. And then the question is, how do you get out of it? Some countries, but very rare exceptions, have managed to sustain that pretty well. If Singapore, to some extent, Switzerland, and so on, because as one gets richer, and also as you change the generation who has never been in that position, just like the saying about 3 generations of a wealthy family, there is that dynamic that takes place. And how do you do it? Whatever it is that conveys the messages of the consequences and the ephemeral nature of wealth and power, and whatever it is that creates the recognition that the greatest capital is human capital. And so to invest in human capital, the capacity of individuals to earn money and be productive, that is the thing that's most important. That's why education is so important. But it is correct. And I saw it in the evolution, for example, when a number of countries went from a 6-day work week to a 5-day work week, and it's understandable. When you reach a certain living standard, it's a natural question to say, well, what's life for? I should enjoy myself. I shouldn't work so hard. But there are also people at your heels. I think the question is, I think it's very measurable. In other words, are you spending more than you are earning? And do you have more assets than you have liabilities? What does your income statement and balance sheet look like? And if that could be top of mind, in civilizations in history, they changed their monetary system to have a link to gold or not a fiat monetary system because of dealing with this. But they still create a lot more credit than there is money in the bank. And then what still happens is throughout history you have the breakdown. So I don't know an easy way to make that happen other than viscerally maybe experience those things in the form of maybe, I don't know whether it's movies or what it is that we experience that. When I look at something like Singapore and the culture in Singapore, it's a small country. The ability to maintain that culture and a bit constant awareness of it, I think, is something that is the key. Yeah. I'm not sure I can deliver the key.
Yeah. Well, here's another one from Leon Zhu. What advice would you give to students who are very passionate about getting into the investment field, especially for macro research and investing?
Play the markets. I'll tell you something.
No, while you're studying. You're going to say yes.
I think it's the opposite. I think I'll tell you. I deal with economic policymakers and then academic economists, and I would say economics is just markets. Okay, they're one and the same. Right. It's the market for anything, economics. And then you will not understand how that works any more than you will understand how to ride a bike by reading about it and dealing with it academically. If you want to learn, you should play the markets, and you will experience how well you learn. I believe that there should not be any I think in school, you should have market games, and you should be able to beat the markets. And I don't think there should be any economic policy maker who can't beat the markets. Because if you
That's
can't,
a very high bar.
No. Because if not, all the markets do is reflect the consensus point of view. Now, if you're in a position of sitting there as a policy maker, and you don't know more than the consensus that's expressed in the price, how can you be I don't know, just leave it to the markets? I don't know, it'll go through its thing. Where is your skill level? Where's your test? Where is your practicality? You have to be practical. If you want to be practical in being able to deal with the markets, you've got to deal with the markets.
Fantastic. So many economists, as you probably know, argue that over the long term, you can't beat the markets because all the information is rationally expressed in the price.
That's so
I'm just telling you. I do disagree.
It's so stupid. Because that assumes that some people aren't smarter than other people, or some people don't have a better way. It's like a poker game. For the aggregate, it's like a poker game, zero sum. Okay. The markets have alpha and beta. So beta is the return of an asset class. Okay, that'll happen and has its intrinsic thing. But whether you can produce alpha becomes zero sum. So the fact that it's zero sum means that in aggregate that can't happen. But individually it can happen. It happens, right? Because smarter people will take money away from those who are less smart. It happens all the time.
Yes. No, absolutely. Otherwise we wouldn't have an investment industry.
Well, and you wouldn't have also value added created. You wouldn't have productivity. Let's say if the market for everything's a market, some are liquid markets, some are illiquid markets. But if there's a property developer or there's somebody else, we have a system in which there are resources that you borrow money. When you borrow money, you enter a market. When you decide that you're going to put a product out, you are creating a market. You are dealing with the market. And there's an economics to that. The fact that we securitize something doesn't mean that that's the only market, okay? There is a market. You're creating a business. When you create a business, you're creating a market. You're dealing with the market. And the ability, the smart will take money away from the not so smart, right? And so that's just the way it is.
Okay. Let me ask you a question about the global order and its future. There's a lot of debate going on about, have we reached peak globalization? Are we moving to a kind of dual system, one dominated by China, one dominated by the US, a sort of dollar zone, RMB zone? Or others who argue that, we need a new multilateral order whereby we reinvigorate international cooperation and try and keep globalization at current levels. What's your view on the big trends that will shape the world order in the next few years?
I think that there are very, very strong pressures in both directions, and that over the shorter intermediate period, there are anti-globalization pressures, but over the longer term, that globalization will be more dominant. So, and I think that because you have a trade-off that two forces. The obvious force of globalization, we can communicate so easily. You can't almost create the barriers. It's very difficult for nations to create the barriers that exist to prevent globalization from taking place. But they have a great deal of power, and they have a big motivation because of wars, all these different types of wars, economic wars and so on. So that there is a pressure to create self-sufficiency, China, Russia, the United States, and so on, are all moving toward creating that
more
isolation and so on, and the barriers and the protections and all of that. That's very anti-globalization. Wealth gaps is creating populism of each side. That is very anti-globalization in terms of, is globalization going to be good for me and what it means, and will I fight for it? So those are forces that are very strong forces right now, and I think they're probably the stronger forces over the near term. But simultaneously, that communication and the power that comes from being able to exchange ideas and be able to do things will happen simultaneously, is almost the inability to prevent it. For example, I just saw on the news that Elon Musk in Iran is
broadcasting, providing internet access,
that he can bypass, so that Iranians, now it's not yet practical because you got to get them these big devices, and how do you get them into the country? But you're seeing those kinds of developments to get around those barriers and so on. And I think that technologies and other things are going to be powerful forces. How that is all manifest, I can't say, but I don't think the game is over.
Okay, I'm going to ask you one last question, which is a combination of a question asked by Irina Ivan and Marios Yanis, both of whom are LSE students, about, you talking a lot about internal conflicts being a huge problem. And one of them is asking, how do you see the role of government actors versus private actors in helping solve complex social and environmental problems? And the other one actually is kindly referring to a recent book that I wrote about why the world needs a new social contract. And unless we find a way to resolve some of these internal social tensions in our societies, we won't sustain support for an open world order. How do you see that? How do you see us being able to resolve these internal conflicts, and what's the role of the private sector and the government in doing that?
Well, the circumstances is everybody's got an opinion about everything, and think that anytime a leader has got an opinion that is different from them, they want to tear it down and fight. And I think it's very difficult to in an orderly way, get to where we agree that there needs to be a new contract. We need to have the reform of the system. We can get into how but the system needs to be reformed. And in history, that has usually happened almost always by these arguing of how and having a fight, and then having a winner, and then the winner gets to determine that. And so I think that the more likely path is that won't happen in an orderly way, and that history shows that there is a revolutionary change to create a new system that happens. As far as how we do it, if we try to do it, I think you need smart bipartisanship and people willing to compromise, to give up for the recognition that the collective good is in their interest versus the alternative. So I know I have a principle. If you worry, you don't have to worry. And if you don't worry, you need to worry. Because if you worry about the things that we're worrying about, perhaps that brings that about. I believe you need a strong middle, okay? I think in our political systems, we don't have a strong enough middle. I believe that you need bipartisanship and a strong middle. And I think how can and compromise and smart, because you have to re-engineer the system. Very remote that you're going to a chance of having that. But if you look at it, one of the reasons I'm excited about passing the book along is that it makes clear these choices. And so if you worry about what we are talking about, those types of conflicts, those types of financial problems, enough that you realize that their consequences are so terrible that you can do something by being smart and bipartisan, and building that strong middle. My hope would be that to some little extent that would move us in that direction. Because you and I agree that we need to have a new social contract, but nobody can agree on every aspect of that contract.
Right. Yeah. No, very true. And you're absolutely right. Social contracts get changed in moments of crisis. It was the Great Depression that brought the New Deal. It was World War II that created the modern welfare state. These are huge upheavals that mean that the terms of the way society works together get renegotiated. And
yes, if I was in the position of being a head of state, what I would do is first I'd have a bipartisan cabinet. I would draw from both sides, bipartisan, smart people.
Talents. Yeah.
And I would then have them deal with their extremists. So the majority of the population can be moderate, and you have moderate, and have them deal with their extremists. Yeah. And then I would create something like a Manhattan Project type of thing. Manhattan Project, when we were working for the war, for an atomic bomb and all that, in which the smartest people get them together from both sides, moderate, and say, you have to build a system. You have to reform the system. You have to reform the system so that it provides much more equal opportunity. Okay, it's got to work well for the majority of people who appreciate it. And so you have to have an engineering system. For example, capitalism as we now have it doesn't take into consideration the all-in cost, the cost of pollution, the cost of these other things. So if you work back and engineer back from what are the goals, that it works well for the majority of people to create, and these measures, these health measures that I get, education and such things, and you have a bipartisan group, and I almost don't care what they agree on. In other words, I'm the opposite. Yeah. Rather than everybody demanding that they have to agree on everything, I'm sort of saying that if they can reach an agreement together and pursue that together and get that sort of support, I would be in favor of it. I think that would be great progress. So those are the only things I could think of about actually going from where we are to that social contract and order.
It's interesting, as I listen to you, the words you said earlier that describe the approach you've just described is radical open-mindedness, of being open to many, many points of view and bringing them together on a common mission. And that investment philosophy that you've been so successful with is also the approach you would take to solving some of the world's economic and social problems. So I'm going to hold on to that idea of radical open-mindedness. I think it's very, very powerful. Ray Dalio, thank you so much for joining us today and for sharing with us the ideas in your book. I would encourage everyone to have a look at the links in the chat, and we will continue to pursue thinking about these issues about the changing world order with radical open-mindedness. Thank you.
And if they don't want to read the book, there's a brief video, 40 minutes, that is on YouTube. That's the quick and easy way to access most of those thoughts. So either way.
Perfect. And we've put that link to YouTube on the chat. So I'd encourage the audience to have a look at that if they want the executive summary version. Excellent. Well, thank you to the audience for great questions and for your participation. And thank you again, Ray, for an excellent talk. We really enjoyed it.
Thank you for having me.
Bye-bye.
Bye-bye.